everybody. Welcome back to a new call, new week, new news. It's crazy that this call was perfectly aligned with the interest rate cut decision, which just happened right now. So that's good news for the markets. Unfortunately, Doman couldn't join us today. He's out there, making things happen for you guys as usual. He's a very busy man. Just always making sure the community has the newest of products, tools in their toolkit. So for those that don't know me, my name is Mustafa. I represent Signally. We are partnered up with FinUp, providing the tech, providing different things that FinUp brings to us, just making sure that we can contribute and bring it to you guys. So for those that have been here in the past week, I have already, gone through the platform several times, but those that are new, welcome, and I'll be more than happy to show you the platform, show you what new things FinUp are cooking and what new things we collaborating with FinUp are bringing to you guys. So I am going to share my screen. I'm just going to need somebody to verify with me that they can see my screen. I hope you can see my screen. If someone can give me a thumbs up, perfect. Thank you. Amazing. Okay, so nice. So let's go on the dashboard so we can show everybody right off the bat. You see, this is really a one-stop shop solution. You have the prices, the Bitcoin chart, because that's the mother of all coins, the balance, the news on X, what's trending, who's removing money, who's buying what. You have the volumes, the top gainers of the day, my trading allocations, which is the amount of money I have put where, and I'm going to show you how to do that. The news in general, what's happening in the universe of financial markets, talks about NVIDIA, the Tech Foundation, the Democratic senators. Now, for those that use this website, they already can tell that things have changed to make your life easier. This website's always improving since the day I have started using till the day now. So they've brought the portfolio tracker here, which is super easy, super convenient. You can see what you're allocated towards. My assets, I withdrew $20 just to show you guys something that we were cooking, but unfortunately we couldn't have it cooked yet, but we will have it for you guys very soon. So the big wheel strategy, and then the AI trading, which I am in, and then the transaction history. Now, something that FinUp, we're working very hard to get for you guys, and they announced on Telegram. Also, if you're not in the Telegram group, I would join ASAP. Anyway, so you can come on the deposit side. It's always a pain sourcing USDT from somewhere else, having to send it here. Sometimes mistakes can be made. Even the best of us make mistakes. You come here, use Tether, Network, BNB. So for those of you that don't have any USDT laying around, what you can do now is buy it with your card. So you don't have to worry about, sourcing USDT from somewhere else. If you have it, cool, send it over here. This is the address you can scan. I always recommend just scanning, makes life so much easier and, leaves you with very little room for error, but you can do the buy USDT with card. You come over here, you put the amount, let's just put 300, just so I'm not using the 300. There's a small fee, then you click buy instantly, verify the address, click continue. It's going to open a page of MoonPay and bring you here. You do this sign up and you do a quick KYC. It takes a few minutes and you are on your way to get your USDT so you can get started, subscribing to different traders and, having your money make money for you. So that's something new which is very cool. You have your trading AI, which is a big whale. Then you have your trading tools. So you have Binance Core, Delta Max, Pure AI Data Trader. You have all the P&L that you need to see, the edit risk. Look at that. Green is scientifically good for the eyes to see, right? Market signals, which is coming soon. Tokenized assets, which is coming soon, as well as trading indexes. Now, that's something we are working very hard together with the FinUp team. I will get into that shortly. You have the research, top news, academy, which is, if for those that want to, educate themselves further, you can have a read. But something that is really cool, they started a support. So, not everybody knows everything. Sometimes you have questions, you want to get answers. I mean, in today's age, you have ChatGPT, but even then, FinUp is like, you know what, we're going to make life easier for our customers. So if you have any questions, you can always search over here, type whatever you need. I don't have a question, but you can go to profit calculation. How's my profit? Or let's go to security KYC. A separate clear photo of the document ID. So whatever questions you have, or most of the community have had, are already here with answers. If you don't find your question, just search it. And I mean, support is always there for you to figure things out that you are, having trouble with. And if there is more issues, you can always reach out, and FinUp are very quick to get to it and help you out. So yeah, this is a basic summary of the platform. I mean, it really, you don't need to go anywhere else. It has everything. I wish, I've been in crypto for so long, and things like this I wish should have existed a long time ago, but FinUp understood the gap in the market, and here they are, making life simple. Not overcomplicating it, just adding simple things and making things happen. So yeah, that's it from the platform. I'm gonna stop sharing my screen. Now, something exciting that we've been cooking with the FinUp members are the tokenized stuff that we've been working on. We've been working on this, consistently for a very long time. Sadly, I know I promised you guys this like a while ago. I was not able to deliver, but finally we have things live. And I think maybe Amadei and Domin are going to kill me for this, but I think these things that we've been working on, the indexes and the tokenized products, should be live next week. Okay, so we are going to launch in partnership with the FinUp the Z index, the conservative one first. I have mentioned many times on our calls that we have 3 different indexes: the conservative, moderate, and the high risk one. So what's inside the conservative one? Now, we have spread things, like I told you guys before, it's a basket of many different things. So what's it going to have? It's going to have stable coin yield generation, and also we weight it automatically, so you guys don't have to worry about it. You won't be overwhelmed. You just put your money on it, and we do the hard, dirty work for you. So stablecoin yield. So we're gonna split the money into stablecoin yield, BlackRock, iShares, gold. You see, gold is doing crazy numbers day after day, so you will be exposed to that market as well. It's going to have the ZIG Vault, which is active trading of DeFi strategies, and the crypto dividend engine. So we're going to have that, we're going to package that and put it all together into one basket. So you can come over there, put however much money you want, for starters, test it out. But, Sven's team are doing wonders, but why not be exposed to a different side of the market that's not available for you? Or in highly volatile, times, Sven's team has been killing it in capturing most of the meat of the moves. So, once the market goes flat, you still want to make money. So you could withdraw some of your profits from there, put it there, or when things tank, eventually you can also put money there and just earn yield on that. Profit is profit. I know we're accustomed to seeing 40, 50%, 60%. I mean, Sven's team is phenomenal, but when times are tough, any profit is profit. You can never go broke, making money. So this is the updates from my end. Now I will give the floor to, like Domin says, the Steve Jobs of trading. I think Sven has joined us today, as well as Doyen is here as well.
Yes.
So I give the floor to you guys.
Yes, so thank you very much. Doyan is here. He's going to share the slides because I'm on an event and I'm on the phone. Just quickly that you see here myself, I'm basically in a Google's office, right? So you can see here.
So, nice.
So today, I mean, as you said, when the market moves, it's always good. The problem is what we have in the last couple of months is market is not really moving. We're staying in a range and having high volatility. So that's the kind of the most deadly what can happen for trading. If you're not in like scalping or something, but we're coming to that in a moment. So now I'm first of all explain you one more time what we're doing, what problems we have, and what things we did to overcome these problems. And yeah, Doyan, could you switch to the next slide? So basically, what we do is we're using AI to generate a lot of strategies and to test a lot of strategies using machine learning to find the best combinations. And basically, what we do, we kind of generate every strategy possible. Of course, there are like different categories of trading, and for now, we focus mostly on trend following. So this means when price moves in a certain direction, up or down, we're trying to catch this trend and in general generate some alpha. Alpha means we should perform better than the asset, right? Because what it makes sense to invest in trading if you perform with Bitcoin better. So, and then what we do, can you go to the next slide? When we have generated these thousands of strategies, we with AI, and we're permanently doing that, we need to select the best ones, right? So out of, let's say, 10,000 strategies, we need to select like a portfolio of 40 strategies and do further testing, backward and forward testing, and then we kind of can assemble a portfolio. Can you go to the next slide? And the next one. Right. So when we have a portfolio, this means we kind of trade several strategies at the same time. Usually one trader trades one strategy at a time. And what we're trying to do is like having like several strategies at the same time. And of course, what we need to check is here, how do they perform? What is the correlation to each other? So we don't want to take strategies which only trade when the other strategy trades, right? Otherwise, we can only use one strategy. So we want to have like some kind of distribution. And the initial portfolio what we set up is a trend portfolio. And if Doyan, if you go to the next slide. So we see here like the results of the untouched trend portfolio. I have those results because when we set up the portfolio on your trading, we also made a benchmark account for us to have like a monitoring and like kind of test things. And what you can see, the untouched strategies performed quite well, even though the volatility is quite high. So basically, the drawdown is double as high as you would expect based on historical data. So there can be several reasons for it. Like one is that we make something wrong. Second is that market changed, or third is that it's just coincident, right? So if you go to the next slide, please. So one important topic is for us always to check, okay, what are we doing on the trading, and is this actually what we expect on the simulation? Because as I said, we're working with AI. The AI is generating a lot of strategies based on statistics, and then we kind of making backtests, right? But you can come to any result with any backtest. So we need to make sure that our expected result also fit the trading. So what we do is basically compare the expected result from the simulation with the real result, and you can see on that chart that it's quite similar, but this is for the untouched portfolio. Unfortunately, we had like some adjustments on the FinUp portfolios, which led to some issues, but we come to this a bit later. Can you go to the next slide? And all what we do is based on statistic. And when we want to have a bad result and we want to improve it, we're trying to work again with statistics. We're trying to understand the data, what we have now, what changed, what we can improve when we change like some parameter or we change a strategy, how would change our statistic. But there's one problem in statistic and in trading. It's so-called overfitting. So basically, imagine you're setting up a strategy based on RSI. You're going to buy a certain asset when RSI is very low, and only on Tuesdays and only when there's a full moon. So as everyone logically can understand, full moon is not related to the Bitcoin price at all, right? But if you do such a statistical test, you can come to the result that you find a very perfect trading strategy related to the moon. But this is just coincident because you just choose certain values and by coincidence they fit together. Basically, they're like guys who won 2 times the lotto, right? This doesn't mean that they have the right strategy in lotto. It's just like a coincidence. It's just what happened in the statistic. And all our work, what we're doing on the liquid strategies is the biggest problem what we have is always to make sure that we don't have overfitting. So when we have trading results, we always compare them to the simulation and we compare them to the past data as long as possible, and then we're trying to see if this what we expect also happens on the trading side. So all the improvements what I telling you now is is to understand in context that we always need to look into overfitting. So everything what we do takes quite a lot of time to kind of exclude statistical errors on that side. Can you go to the next slide? So what do we now have on the trading side? I choose this picture to give you an understanding what you actually own. So you own your own little trading floor. And on this trading floor, initially 40 people worked. And all these 40 people, they made trades for you. And we distributed the capital evenly to them. So basically, we gave everyone $100 and let everyone trade. And how we selected these traders, we looked at their CV, we looked at their past statistics. They maybe worked for us a while, and we select the best performing traders, right? And this is exactly the setup what we had initially. We had like 40 traders. Everyone had like a good past record. Everyone had a good data, and everyone got the same capital. And then we let them start. Can you go to the next slide? So now, after a couple months of trading, we kind of looked at the performance of these 40 traders which we hired initially, and we saw that some of them stopped to perform good. Again, this can have different reasons. Maybe because the market does not fit their strategy, maybe they have some personal problems, or maybe there was overfitting in the data we selected, market change or whatever. So what we did now is we eliminated the traders, we fired them basically from our trading floor, which didn't do a performance, right? Because we want to keep the ones who performing good, and we want to kill the ones, kick them out, which cost us money. And this is basically what we did. So the initial 40 strategies or like 40 traders we had, we reduced to 27. And that was an adjustment which we had last week. So basically, we reduced the strategies and we kicked out the losers. And I come to that in a bit later, one more time. Can you go to the next slide? So on the Binance account, we have also some other problems what didn't help to improve the results. So basically, I said every trader got the same amount of money, right? So we said, okay, let's try a different risk distribution. Let's distribute the money based on the assets they trade. So basically, we made not 40 guys get, or now in the new case, 27 get the same amount of money. We said like everyone who works with Bitcoin, trading Bitcoin, must split the money with everyone who works in Bitcoin. And we added some strategies and so on. And this actually led to a result which is worse than if we wouldn't have touched it. So that's of course kind of not ideal, but that can happen. It's usually not happen that often, but that happened. And so we now want to then focus back on our strengths and kind of eliminate all the noise what we created, what kind of hindered our traders to make money. Can you go to the next slide? So therefore, we started to work on further improvements in order to see what can we do to recover drawdowns, what we can do to make more profits. And basically, it's all come down to, we looked at so initially we had like 40 strategies, or in our example, 40 traders. We looked now what they made all the last 3-4 months, and the ones which performed bad got fired. right? So now it's another question: should we distribute the money what they trade differently? So maybe based on performance or based on win rate, in order to make the drawdowns less deep, or at the end, the ones who are more successful should also trade more money. And here, this is a lot of work on our side in order to make this so-called risk distribution, because we need to say, hey, you get $100, you get $200, and you get only $10 because you're more risky. And the first model what we show is like basically we looked into the data and said, what would be the perfect setup in the last couple of months that instead of making the result we have, making the best possible result with the existing strategies. And this is like one of the setups we came, and you can see the yellow curve is basically the ideal result if you would give them the allocation in order to make the ideal result. And then we tried to compare that in the past, right? Because only because I give them now more capital, it doesn't mean that they perform in the past also good. And we came to the conclusion, yes, with this allocation also in the past, we would perform better. But the problem what we have here is again overfitting. So if we just select what we think is good, we can run into the problem that it's just coincident. And now we made the risk distribution, we mathematically optimized it on the last 3-4 months as in a trading period. This means it's worked good also in the past period, but there's a certain extent or a certain risk that there's overfitting. Therefore, we came to the, can you go to the next slide? To the second risk distribution model which we worked on, and we said, okay, let's not do this risk distribution based on the last 4 months. Let's do it over the overall time. So we kicked now all the losing traders, and we checked what would be the optimal risk distribution in the last 4 or 5 years to get the best possible result. And this result led to a way higher returns in the last couple of months, a bit less than the optimization based on the period from which we trade with you, but overall much better results. And this is also a change what we took live today. So last week we kind of killed all the losing strategies, and from today on we worked with a different risk distribution. So basically, in order that we not give every trader the same amount of money, or every department, everyone who trade with Bitcoin, but we give every department based on their results risk distribution. This means the pairs what not perform so good getting less risk, and the ones who performing good getting more risk. So this means they're getting more money to trade. Can you go to the next slide? So like we have still some issues what we're working on. Currently we have still very high dependency on trend. And unfortunately, the market is not really trending. So we're chopping around in crypto in the same range for like 3-4 months. And every move is, if you look into the crypto price, Bitcoin goes up for a couple of days and then it goes down, and it's like highly volatile. And this is like very difficult to trade if you're trying to catch a trend, because there's no trend. It's like kind of flat in a high volatility. So if we would have flat, but we would have like a less volatility and would have small trends, we would perform actually better. But there are also things to overcome that. I will like introduce our additional strategies or additional traders which we add to that in the next call. I quickly teased this in this call. And the other issue is that we cannot just add strategies to that, because the market is quite highly unusual. So we could hire now some traders which perform good on this market, but maybe not overall in other markets. And therefore we said, okay, let's work with what we have. We have like 40 strategies. From that, 13 strategies perform very bad, and we had to kick them out. But the other 27 strategies performed very good. And then in a second step, we said, okay, let's now allocate the money in the best possible way, that the ones who perform good getting even more money than the ones who performing bad, in order to achieve the best result. Can you go to the next slide? And in order to not have similar issues in the future, we implemented a kind of a live tracking. So now, daily, every of our 27 strategies which we still have, getting tested every day and getting monitored every day, and automatically kicked out from the company if their performance is bad than worse than in the past. So let's say if we have a strategy and they made in the past, in the worst case, in the most difficult situation, -3%, and now they make a -3.1%, they automatically get kicked out. So this stops every strategy from being in our portfolio when it starts to perform bad, and that's a huge improvement. And the other thing what we're working on is like a more complex trailing stops. So when we're doing a trade, we always setting a stop of this trade or a take profit of this trade. And to set this, ideally, we're working with different mathematical formulas, and we think we have like statistically the overall best formula for all strategies, but we want to switch to individual formulas and taking into account events like today, where we have FOMC meeting, where we have high volatility, so that we make the algorithms on the stopping side and take profit side more smart. That should secure us more profits, because most of our trades actually start in profit, but they're going back sometimes in a loss and then getting closed, and we can like improve this with more intelligence. Can you go to the next slides? Yeah, and that's basically all. So I just wanted to give you a quick overview what we're doing. So again, like the trading what we had on your accounts didn't work ideal. So in a percent statistically over the period in time, we're still positive. But when you joined in the wrong moment, you have like a drawdown. And unfortunately, less people join in the beginning and more later. But we exactly know what we're doing, and I wanted to explain you the problem that we're using like a lot of strategies which should be actually our strength point, but some of them didn't start to work well, so we had to kick them out of the portfolio. And this is what I showed you. And the other thing is that we now bringing more intelligence to the algorithm. So I think you should feel like release and more profits in a short period of time. So I guess in the next 2-3 weeks we should start to generate like quite some good profits. And in addition to that, we have like some more improvements which I will like explain you in next week's call. Thank you very much and have a nice evening.
Thank you, Sven, for taking us through those very deep insights. I'm sure your team is working extremely hard day and night to provide for the community. So guys, yeah, that's it in a nutshell. I went through everything. And for the people that were new, this call is recorded. It will be back. Also, make sure you join the Telegram channel because all the alpha is dropped there. So if you're not there, you're missing out. Thank you for joining again. It's sad we missed Domen. Domen will be here next week. Like I said, he's always out and about working to bring new tools to you guys. Thank you so much. Have a lovely night from Dubai. Bye-bye.